Hey guys, Des here. Today I just want to go over trades for October 31st and also November 1st and go over the trades that we took and basically why we took them. So, I'm just going to break it up into sections here as you guys can see so I can separate the trading days. This will be easier for everyone to see. So, on Monday open, you guys noticed that we opened at this level here, which was resistance on Friday, would turn into support towards the end of the day before it legged up. However, over the weekend into Monday open, we did gap down and we came to retest these levels. So once we got up here, I was watching for basically a retest of the EMAs as you can see here, and basically price to push down to this 385 level because once again this is Friday's point of interest level, which I'm watching for a potential bounce. So here's how I went about taking my trade for puts. So as you can see here, we're getting a lot of upside or downside wicks because we are pushing up and coming right back down. So this shows me that buyers aren't weak or aren't strong here, and this is actually going to turn into a resistance level on at Monday open. So I had trends something like this drawn out, and I was telling everyone, I was like, right when the 21 EMA test, once we get close to it, I didn't want to enter here because I still wanted one more pullback before we do get the eventual push down. So let me actually make this a little bit less bright, just like that. So as you guys can see here, price pushed into back up here above the 9 and under the 21 EMA. I was telling everyone I'm going to take sells once we come up here. So at the top of this candle is where I alerted SPY puts. I was on voice chat. We all got the good entry here for SPY puts, and we basically ran them all the way down to this 385 4 level. So once we haven't made a body meal for the day, I like to just scale the percentages instead of price targets. Obviously, we did have Friday's point of interest here, so I was just watching for this 385 level to bounce. However, I wanted like 50 cents more down. We didn't get that, and I scaled most of my contracts out here, and we caught like a really nice 40% gain to basically start the day on Monday, which set us up for the next trade. So the next trade that we actually took was calls. I was watching for calls because we were getting these bounces out of this 385 level. As you can see, we got 1, 2, 3, and this will be the fourth bounce, which I was actually looking at to take longs. So I just had something like this drawn out because we were rejecting this trend line pretty nice, as you can see here. Once we did get this area of we had some nice push up, I actually entered calls off this candle, trying to predict this breakdown off this little rebound from this demand zone. I was bullish at this time because we did test this zone so many times, and it did look like sellers were getting exhausted. And we caught a pretty nice move, and we did have to average down though, and I'll show you guys exactly where we averaged down. So once we did push up and started rejecting, we had this little flag here. So when price pushes up like this and starts consolidating like here, you could call this a falling wedge on the 1-minute chart. Obviously on the 5-minute chart, it's not going to look as clean. Let me show you the 5-minute chart. It's not going to look as clean on the 5-minute chart. However, on the 1-minute chart, it looks very nice, and I do love trading the 1-minute chart as well as the 5. So I got in at 360 on the SPX cons right at 744. So right here is where I got in at 360 each con, and I had ads at 2.9. I'll let everyone know before we enter the trade. I'm gonna have ads at 2.9, and it's hard to predict the contract prices when prices pull down. On options, that's a little hard. So sometimes the limits hit, sometimes don't. However, we got the absolute bottom tick on these contracts. Contracts pushed down to 2.85. We all got filled on SPX, and we had a really nice average, and we basically ran it up all the way to a high day. This was my area that I was looking, to take all my profits at. Obviously, I'd scale on the way up to percentage-wise because we did have this resistance here and even this resistance here. But my ultimate last target was this high of day here because, we opened up here and we rejected. This was an intraday supply. And we got that really nice move up before coming back down. And we did channel up until news came out, which dropped us about $2 in 2 candles. So as you guys can see here from Monday's price action, basically we just ran through these zones pretty much all day, had a nice little consolidation day, and those are only 2 trades that I decided to take, and basically what the team took. So moving on into Friday's price action. I didn't alert any plays on Friday because I was at the vet with my dog, so I had to work with him and make sure everything was good on his end. So, but I did take a solo trade that I want to still show you guys what I took and why I consider this an A+ setup. So off rip, we had this 390.2 level, which I have. Basically, we've been rejected off this level multiple times, And on the US 500 chart, you can actually see price actions over here getting rejected at this pre-market level. Obviously, you can't see it on SPY because I don't have extended hours on it, but on US 500, just imagine candles being here getting rejected. So we opened up into this little flag and we broke down out of the supply zone at 390. And basically, SPY was just making impulse moves down all the way down back into Monday's demand. So this is why it's very important to look at the previous day and see where price could pull back to and push up from. I fully expected the price to come up and bounce from this level because, obviously, once again, this is Monday's price action where this demand zone was holding. I missed all these moves here because, I wasn't fully paying attention. However, I literally took a quick glance at the charts while I was at the vet and I saw this. So, once price pushes up or price pushes down like this, I'm expecting fully to price to pull back into a certain area, and I'll show you guys exactly which area it is. This is why I like using the 5-minute with the 1-minute chart, because look, on the 1-minute you could see a clear wedge forming to break down, which is bearish because this is a rising wedge down. We come from the downside, then we start pushing up channel into a breakdown, and I'll show you guys why I was so confident in this trade. So as you guys can see here, imagine these candles weren't here, right? These 1, 2, 3, 4, 15-minute candles weren't here, or 5-minute candles weren't here, excuse me. Look how overextended price would be from the 9 EMA on the 5-minute chart. I love playing EMAs as a pullback spot to add or scale my contracts. Once again, nothing new here. We had this breakdown into this bounce off this demand at 385. Price was channeling, and this was the first EMA retest on the 5-minute chart. And this is where I was scaling into my shorts. I was actually down on my shorts because I entered a little bit early around this area right here. But I was scaling this contract. I was scaling in on these contracts because I was confident on this breakdown, especially when the 9 EMA on the 5-minute touched. That's where I scaled 3 more contracts in, and I caught a really nice move down on SPX. And my first target was low a day. As you guys can see, we pretty much smashed their low a day. Due to my average, I caught about 56% on this move. My last average was so I started the position, my average was like 7 something. I got it down to like 5. Just sizing it 1 or 2 contracts at a time, according to my risk, according to the play that's still playing out. I would have stops right above the EMAs or above this trend. I know exactly where my stop is, exactly where my profit target is, and basically that's how I executed this trade, and I walked away with a nice gain on SPX. So for the rest of the day, I really didn't trade. Once we broke down, this previous demand on Monday did turn into resistance and supplier, excuse me. So I'm gonna make this red going into tomorrow's trading day. So I hope that helped. This right here is an A+ setup for me when price moves, impulse move into a retracement of the 9 EMA on the 5-minute chart into a breakdown. That is the A+ setup that I'm looking for, and I'll take this trade 10 out of 10 times. Even if it fails 1 out of 10 times, that's fine because I know this has a very high chance of actually going my way, and basically that's exactly what happened today. So I hope these trade recaps helped from Monday and Tuesday's price action, and until then, I'll see you guys.